Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, March 5th, 2024. It is 10:14 a.m. Eastern Time as I'm starting the video, so we're about 45 minutes into the trading day. And this one will be brief, relatively brief, of course. And want to just cover an update, do an update on the markets, the semis. When I say the markets, the equity markets, I'm sorry, the semis. And the VIX. I haven't covered the VIX lately. I've been meaning to bring it up in the last couple of videos. Since last week, it's been back testing that trend line. So anyways, I'm going to throw that out to you guys here. Cover the charts, throw it out as a trade idea again, or reiterate it as a trade idea, however you want to say. But as I like to do from time to time, I'll go in. You can see there weren't many questions or comments yesterday other than this one. So we have 6 here. Some of those are my replies. Let me just zoom in. And like I said, I think there's the takeaway is others may have the same question. So, okay, FYI, this is in regard to yesterday's video. If you watched yesterday's video, I covered stocks. I covered on a weekly time frame and mentioned that it was still above the trend line, so I need to address that. So here's my reply. Just like SPY, stocks made a single day close, and QQQ printed 2 closes just in front of NVIDIA earnings, which I had warned about in advance and at the time and gave those breakdowns, a higher chance of proving to be whipsaws because they happened right in front of NVIDIA's earnings. So I said you have to, you can take them if you want on faith, the sell signals. They are breakdowns. A breakdown is a breakdown unless it fails. That's what happened. And so, like I said, it's no matter what, I tempered the odds down. You can't, you have to, in my opinion, reduce odds when you have NVIDIA is more important than just about anything now. Apple, anything. It's just everybody's talking NVIDIA. So that's what happened. We know what happened. I'm going to get to the charts in a second. So to make it clear, both SOX, the semiconductor ETF, that's one of 3. The big one that we usually trade because you have the leverage versions, SOXS and XOXL, SPY. They both broke down one single day. NVIDIA reported they snapped back up. And then QQQ had 2 daily closes below. So that's that. And SPY, they both snapped. It was solely due 110%. This will put it at that. We all know it was NVIDIA's earnings and the impact that it has on those, both QQQ and SPY. It's mathematical. So you can argue all day long. Nobody will argue that that wasn't the catalyst for the pop the following day after NVIDIA reported. So, all right, that's been covered. And so most importantly, again, the devils are in the details here when trading. SOX, as highlighted in yesterday's video, SOX has yet to take out that same uptrend line on the more significant weekly time frame. And when I say more significant, that's for identifying potential trend changes. And I talk about this often, very often, but it bears repeating whether you're new to the site or you listen to these videos 100 times if this doesn't sink in. When trading, I trade multiple time frames. And I always say this, even if you are a swing or trend trader, which I'm speaking to right now in this video, this isn't an active trade update or anything, swing trend trade. The 60-minute charts will get you in sooner because you have the trend lines, you've got a breakdown. And as I always say, if you want to confirm or put the probabilities much higher that a breakdown or a breakout, if it's a bullish breakout, will stick, you want to see a solid close above for a bullish breakout or below for a bearish breakdown, the support or resistance level that you're looking at. In other words, if you have a bearish rising wedge pattern, which we had on the semis, I'm just drawing it out here, and this is your uptrend line, it's very common to get these intra-period breaks. And intra-period, that's what I'm talking about. A 60-minute chart, it's a 60-minute period. The candle completes every hour other than the first half hour of the trading day, because there's 6.5 hours in a trading day. So 9:30 to 10, and then every other one's a 60-minute candle. Daily time frames, obviously, at the end of the day, 4 p.m. And so again, this is just something that I've come up with. I don't know if others use it. It's just I've learned this over the years. And you can look at it when you look at charts and you draw a nice clean trend line, especially on something long-term on a daily or weekly chart. If it's a trend line that lasts many months or even years, it's very common, if this is your trend line here, to see if this is your candlestick, it's forming like this during the day. It might go down intraday only to close the fat part, the body, back above. And then that gives you a little, I don't know if you can see it in this video, but here, I'll draw it with the draw it out here. I probably should just pull a chart and show you one of them, but I got to color this up. So there's a trend line. Let's say this is your candle, and we'll make it red just for fun because it's an uptrend line. So you see a red candle, and it's forming through the day. It's doing this, and that's if it prints like that in the body, the fat part, if you fill your candles, that's going to show you the close there. And then what you'll see between, let me color this up red. This is just basic 101 candlestick, trading, learning to read charts. So you've got the skinny part up top, which is called the wick. They're both called, shadows, but you can call the shadow you call it the wick when it's above, and you call it the tail when it's below. Those are the shadows. This is the body. So that would be, if we're trading on a daily time frame, at 4 p.m., if that's what your candle looks like, that's a sell signal, and that helps confirm it. Now, you can take it intraday, right when it breaks, especially if you have a high degree of confidence that breakdown will stick. It's going to give you a more favorable entry. Sometimes by the end of the day, this candle can be way down there. Or what I like to do quite often, maybe take a starter position on the initial breakdown or on the 60-minute chart. And if you get that sell signal on the daily with a solid close below, then that's a sell signal. Remember, that's what I covered on QQQ, SPY, and SOX, that yes, that day they did, but then boom, take it with a grain of salt. Now, so what I covered in the video yesterday was the weekly chart, and this is what I'm referring to. That's what I shared in that comment. Let me go to the live weekly chart. So here's SOX. This is my clean board. There's an NVIDIA pre-earnings breakdown. I might, you know what? I had different boards. My apologies. This is my main board here, and so what you can see was only one day, and that's how I had the trend line. I just today started a new what I call clean board. I'm going to fix it where it needs to be. Why did I do that? I'm not trying to make it just fit. If you zoom in real tight, you'll see, because I'm coming in. This is how I draw trend lines. I start at the low point there. I come in, I capture the most number of candlestick bodies and or wicks. You want to try to get the lowest points, and that's where the most number, including that one, happened. So that was, we parked on it that day. Went the day before NVIDIA report, the day they did report, but remember they report after the close. They had that breakdown, and again, so I just want to make that clear, guys. That was, yeah, it was a breakdown. It was a sell signal that day, but again, one taken with a grain of salt, and you could have done one of two things. You should have, first of all, made it very clear before them on those sell signals. Those are only starters. That was the breakdown on QQQ was the second of three I was looking for to go into a full short position. The first one came on a 60-minute chart. But we never got that third and final. So you're either still in it and you're giving it room if you're swinging for the fences, talking, 50, 70+% downside in the semis, which I still see coming, then you can certainly, give it some room. But you shouldn't be, at least me, I can't tell you what to do and how to be positioned, but especially after the breakdown, in my opinion, nobody should be heavily short or fully short the semis right now. We need the next sell signals to come, which is, again, the trend lines were only violated on a single day on SPY and SOX and just 2 days on QQQ. So they are still valid. A little less validity when you've been punched through, but I've given you yellow lines. And of course, here's SPY. Very clean. This is the clean board I was sharing. There was that see, sometimes these lines drift. Coming right at the bottom there, So we parked on it, then 1 day below, barely below again, and I think I said at times you have to squint to see it, but there it is. So we've been dancing on it, we're under it, but you can see there's that yellow line on my clean board of SPY, and then QQQ, like I said, there were 2 daily closes below, and then right back above and back testing sense, kind of just dancing on it through it. I've talked about that. So as I said the other day on my clean board, 435 right now is, to me, the magic number that needs to go on QQQ to usher in the next wave of selling and provide an objective short entry, whether it's for you a new short entry, whether you're bullish, like, some on the board are, and there's no problem with that. It's been great to be a bull in an uptrend, but you might want to stop below that level because I don't think we're going to limp on down through there when that's taken out. I think you'll see, unless it's just an intraday break, again, take away daily chart, 435 daily close. But I think you're going to see that, and I think you'll quickly probably drop down and backfill that gap. So I think the red candle, this is pretty precise analysis, but this is what I like to do. So say what you want about it, but this is what I think will happen that day. Let me trying to get a line tool here. I'll just put it there. It'll probably come down through there the day we break it. Again, unless we snap back and close on or below it, above it, we'll probably come on down and backfill in one fell swoop that entire gap right there, the NVIDIA gap we call it. And if so, you're going to have, again, depending on where the day starts, that's a big thing. But just from 435 to get down and backfill it, I'm trying to get as close as I can. Oh, shoot, I had 4. There's 435.15. All right, we'll just go there. That'd be about a 2% drop. Look, again, nothing big, but big to me because it'll probably then give me breakdowns on the other Mag 7 or big tech that I'm talking about and the sectors in the S&P I've been talking about and everything else. So, all righty, let's let me, while I'm on the charts, let's just stick on the charts and let me go back to stocks on the weekly, because that's what I started this whole conversation, again, addressing that question. Very clean. There's no playing around, no trying to force this trend line the way I want it. That's the same exact trend line, and it's on a weekly chart. This is how I would draw it. This is how I have it drawn. This was the original trend line, and you can see here we had it there. We broke down. We had a short on the semis back then, and it was a profitable. You know, the semis drop. Let's not forget these corrections is what swing traders do. An investor puts his money in the semis, his or her money, and throws away the key, and then says, you know, hey, if I'm like Warren Buffett, I got a 20-year time horizon, I'll make money in the semis. Yeah, absolutely. You don't need me to tell you that. Swing traders will come in and try to capture these swings. And so, yeah, I've had plenty of sell signals and plenty of buy signals. I've probably posted as many long entries this year on QQQ and on Apple and in the semis that I have short entries. So sell signals that occurred back before, you know, if targets were hit and support levels, and that's where we rallied. Did I think we had the chance to go down? Yeah, absolutely. I thought there was a potential to start the next wave down, and I still do. That would just happen to be a corrective wave. There was more juice in the uptrend. But as strong as a case I could make back then, I can make even a better case now with this much bigger divergent high. That's going to most likely be the technical catalyst for, again, since December 14th, and I haven't wavered on this. It's not my call for the drops down here. That was back in December 14th, looking for a roughly 52% drop. What happens the higher we go? Again, either I'm going to be wrong. If I'm wrong, I'm wrong, and that's just that. If I'm right, remember T2. This is a call I made back here, and so this is when I say marginal new high, that's what it is. You might say, "Oh, Randy, we're above the previous high by blah blah blah, 21%." Yeah, 21% on a bull trend that went up 3,000%. So if you look at the big picture, and that's log scaling. You turn off the log scaling. This is what it looks like. This looks like a lot like almost like the dot-com bubble, this parabolic advance. But log scaling puts everything in percentage terms. I strongly encourage you when trading on long-term weekly time frames or any security that has large price differentials between the highs and the lows, log scaling is much more favorable. It's a better charting, a better way to put your charts. It basically puts everything in relative percentage terms. In other words, if the SOXX went from $50 here to $100, it doubled, and then when it went from $100 to $200, it doubled again. So you can see it kind of fixes that, and so a $10 move is no longer significant, nearly as significant as it was when SOX is trading at 674 as when it was trading at 64. Okay, so that's big reason to use that. So there it is, guys. And now the thing is, again, this is just assuming today, and we don't have any right now. We need to see this trend line break. When we get the sell signal, if it came soon, it would now be, instead of a 52% drop roughly that I was looking for back in mid-December, now it would be about a 60% drop. And also, very important, I need to say this, that I may modify it because initially T2, when I first laid it out, and look, we almost hit it. For all intents and purposes, we came very, very close. And there were a lot of reasons, the divergences and all that, to cover and go long, which we did back in the beginning of January. That's when the Qs bottomed. That's when I got bullish, posted covering all shorts, going long big tech, expecting the FANGs to outperform, which they did, and overweighting Apple and Amazon as my two top picks. So we were in definitely not shorting them there. And like I said, it came very close. But the point I'm trying to make is initially that was back before the whole 42% drop or whatever started. T2 was an intersection of the primary bull market uptrend line and that 271 level. And I may leave that trend line the way it is. So where I'm going is, if I'm covering this down the road right now, if I had to, let's just say you put a gun to my head and said, make a trade on stocks. It's got to be long or short. It's got to be a long-term trade. You got to trade for the next, 50% move. 40. I would short it with the OCO order. You'd cover right here at this level. This is now where I think we'd probably almost certainly get a reaction. I would put two things. I'm going to give you a high degree of confidence that we're going to go there. It's about 387. It's from where we're at now. It's about a 390. It's about a 44% drop. And then when we get there, it's probably going to, if and when we get there, coincide with zigzag down. The Pavlov's dogs will be buying NVIDIA when they can, and eventually they start giving up and puking up. And then, so those will come in together. My primary uptrend line now in this level. So remember, back here, that's where it came in with this nice horizontal support level, which quite a few indexes hit. And it was those highs, the pre-COVID highs. And so we reversed just shy of that. And then you have the other semiconductor sectors as well, ETFs. And you can see here, they hit support. They had positive divergence on XXD, et cetera, et cetera, et cetera. Okay, I spent a lot of time on that, but I just want to impress the importance, in my opinion, of trading off multiple time frames. And again, if you want to be that second mouse that gets the cheese, and you want to, you want to short the semis. I'm just drawing lines here because I'm almost addicted to it. I haven't updated this XXD chart in a while, at least on this board. And there's your kind of the uptrend line, the wedge, the divergent high. We had a divergent high there, and it's not as if it didn't pan out. Again, they're not sell signals, but they're indications of corrections. Likely that was 11% drop, certainly a swing tradable drop. And now we have not a new divergent high, simply an extension of that previous divergent high. Indicators have been, as you can see. And this is, I've talked about it lately. I cover SOX a lot because SOXX, the Phillips Semiconductor Index, was the first to market, or first semiconductor sector out there. So when you want to chart long term, this is, I'm old school. I became a stockbroker back in the early 90s. And this was the around that time, mid 90s. Around that time, this was the first and only semiconductor sector to watch. So if you want to chart it long term, and there's that same uptrend line that I'm targeting. And I know few believe it right now. Few can even fathom NVIDIA dropping that much, but I've covered NVIDIA many times in the past. I've covered the semis. Yeah, AI is here to stay. But first of all, to me, it's not as the day I start hearing that, Google and Microsoft and now Apple's trying to get into it a little late to the party. They've given up on having their own car. When I hear how they're monetizing this, I've played around with it and does nothing for me. Others like it. They like ChatGPT to write letters, but there's all the free versions. If a product's great, you can charge what you want for it. If it's not selling, not moving, you discount it or you give it away free. And that's what I think they're going to be doing for a while. So I think we're going to see it within a year from now that these companies have plowed tremendous amounts of capital, diverted Google, Alphabet, diverted tons of the resources right into AI, and they all want to be like the leader. Give me feedback. How many out there are buying their premium, AI plans? Because from what I hear, the free stuff out there does what you need to get done for most people. And again, there'll be niches, and down the road, 10 years ago, AI is going to be around. And AI is, again, just another iteration of the current technology that we've had, just faster processing and artificial intelligence. It's just, again, it's ginormous, just overnight leap. Again, it's been progression, and then ChatGPT kind of set it all off because it was cool. It was fun. I remember my kid came home from college and first introduced, told me about it and said some silly things in it and wrote a little story for him. And Anyways, that's that. Okay, where am I going? I know I just went off on a tangent rambling, but the semis are cyclical. NVIDIA is cyclical. I've covered this chart so many times in the past. This is the nature of this beast. 90% drop, 86% drop, 50, and they're not random. How do these, okay, Randy, yeah. You don't want to be in that long, and you very much, or I do very much want to profit from it short. So this is when you want to go, you don't want to be long or buying NVIDIA when you're overbought with big divergence on the weekly time frame here. This is, again, the weekly chart. And so just like back here, called for it to drop to T1, T2, and then T3. We hit T2 almost perfectly, bounced. That was a 70% drop. So this whole cyclical nature of the semis is not gone. Again, I have to say this, it's so important. The Fed has not come up with some magic, finally, after all these years of being in existence, they didn't finally invent some perfect formula that has canceled the business cycle. The business cycle is ebbs and flows in the economy, expansions and contractions, recessions, boom, bust. And of all industries, fewer are more subject to that boom bust cycle due to supply and demand overcapacity when they're pumping out chips, and all of a sudden things change and the orders start getting pulled back in. And the semis are notorious for having strong rallies during bull markets and very strong, powerful corrections during bear markets. And so there it is. So divergent high, you can, the fate of this will go with SOX. So if you get that, there's the same uptrend line on SOXX that I covered right there. You just need that to break on a weekly time frame. There was the breakdown in NVIDIA intra-week, but remember, right before earnings, a little 5-minute pop, and then earnings happened, and there it is. So, all right, let's not spend too much more time on that. I just wanted to point out that that's it. Technicals are still in place, the negative divergence. And that target, if you're looking, this is a weekly. It's so simple. You can clean. Primary uptrend line right here. So, I'll just write it for you. This is if you are a trend trader or a typical swing trader, you don't want to game all the little bounces. This is how I would trade it. Again, if and when you get that weekly, this is a weekly chart, so a weekly close is going to be the confirmation sell signal confirming, along with SOX. You want to see SOX and the other semiconductor ETF sector ETFs breakdown. Boom, drop. Most likely, almost certainly, they'll come in and buy the initial drop to the trend line. You can game a bounce if you want, or maybe you want to just wait, recycle back in if you covered, or just sit tight and hold out for the prize. 506. That's where NVIDIA is going to go on the weekly chart. I would put a very high degree of confidence. So just to get to the trend line, again, if and when it gets there, they're talking about 20, 22%, give or take, again, depending on if and how it gets there and where it starts to fall from. Because remember, I point this stuff out, guys, and then, this is where I get it's a little irksome that, pointing this out, up, 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 up. Again, if you're trading this weekly time frame, you got to have the sell signal. So the sell signal can come from up here, and I'll still be talking about this trend line if it comes at another 50% higher, or whatever, 30% higher. I'll still be saying, hey, it just means now you have farther to go to check that trend line right there, and then boom. So from today, again, I told you it was 20% give or take, and down to 505. That's about 41%. If and when that's taken out, depending on what I see at the time in the market, maybe we go down here. I put a good chance we go down there. A very good chance, in fact, a lot more. That's 50%. So, okay. There's NVIDIA. Again, I'm covering this one a lot because it is right now, it is the former Apple. It used to be our Apple or any of the things. You had to break the leaders. Well, the leaders, Apple's broken. I already covered that. They got Apple. Now, let's see, they got to come after the rest of them. That's what I'm going to do in this video. Back to the questions. I thought you'd be covering the recent breakout of Bitcoin. Bitcoin, this hasn't broken out. It's basically testing the previous highs. And again, if it's, and everything is relative. If it's, on Bitcoin, because of the magnitudes of the moves of the trends, we're talking high double digits, both on the upside and downside. When Bitcoin corrects, it goes down 70%. When Bitcoin rallies, it goes up 100 and something. Remember, when you lose, and the thing about drops, you might say, well, why don't you only go long? This is simple math, a lot of people may not realize this in trading and investing. If you hold a security, you buy something and it drops 50%, well, guess what? What do you think you have to make to get back to break even? 50%? No, you have to now make 100%. The stock then has to do 100% there. That's because you got cut in half. If a stock goes from $100 down to 50, a 50% rally from there is only going to get you back to $75. You need to then double your money. And so that's where it's critical. And that's what, we do here. And I know a lot of people don't short. And so the takeaway is, over the years, we've been able to, I've been able to post analysis where you could sidestep some major correction, including the one, back a couple of years ago where NVIDIA dropped, 60-something%, if you were a NVIDIA bull back then. So it'll come. We've had, like I said, some recent whipsaws on the daily time frame, and of course on the 60s. The 60s played out. We had to hit some initial targets, but we need to see the weeklies go. And then on the levels on the daily that I gave you recently, I'm going to cover that again. So on Bitcoin, I'm sorry, let me get back to that. Here you go. This is the actual Bitcoin crypto right here. I would say divergences aren't a sell signal, but this is the first divergent high. We had some beautiful little wedge. There it is. If you want to replicate it, divergent high, break of the wedge, take you back to here. Last time we had divergence, I'm just using an arrow tool. Imagine if it's a line tool. With divergence there, went in this trading range. It was small correction, had a divergent low. It was double digit. It was worth trading. Divergent high there, correction, divergent low there, rally. And that was a divergent low rally. So there it is. There's your setup right there for Bitcoin crypto. Or Bitcoin futures. This is what I usually like to trade if I trade Bitcoin. I don't care for the ETFs. But there it is. Boom, boom, right on the trend line. Bearish rising wedge. Price targets, you're going to come in here, probably buy that right around here, be your first stop, and down here. And then if things get ugly, but again, I think it's gonna probably take the stock market buckling from now because it's a risk-on deal. So we're gonna get back into that. Let's do that in the video. So there's my, and I just covered Bitcoin last week, so nothing's changed. I basically in the video, you can click the link. I said, look, I don't, it's gonna run at, traders are gonna be looking at those highs, and that's where we're at. I didn't maybe not cover it there. Yeah, my bad. I just was showing you the current setup. If you're looking for a setup, you go back here. Let's see if this one goes back. No, they don't have it back that far. Yeah, my futures aren't going back that far. I covered it the other day. I don't have stock charts pulled up. I covered it there. Here's that first to market ETF-like instrument. And you can see here, go to clean board, the weekly. So that's it, guys. This is what I'm trying to say is, if it's above the previous high on GBTC, which doesn't do a perfect job of tracking Bitcoin, does a decent job, but it will trade at a premium or discount. So that's the previous high there. And if you have to squint, what you do to see we're above it, for all intents and purposes, is just a retest of that high, which I said last week is almost certain. That's what the trader is going to be eyeing. And you get that close, you're going to do that. So there it is on that. And I gave you a setup. My convictions aren't super high, like I said. Last week, people say a couple people said it was going parabolic. Is it time to short? No, not yet. You have to have some pretty good sell signals and something like that. It's still, those ETFs are still vacuuming. They're just sucking in money. And this is a great comment from Jay McCallum, sorry. Bitcoin, first run, blah, blah, blah. Just talking about the amount of, and this is what I even commented on last week when I think it was last week's video, I was covering the M2 money supply and showed you there's just been this unprecedented, M2 money supply has always grown. That's the amount of cash in circulation in the system in the U.S. And it's been contracting, and it's not being talked about much. I don't hear it much elsewhere. Some certain places when you look at people that kind of have their eyes open to what's really happening under the hood. But it's a tremendous vacuum. I don't know about these stats, but I did read the Journal of Barron's put out today something like 50 billion just in the last coming into the new ETFs that just hit market. And here, I'll just read my reply. Agreed. I mentioned that in a video, how M2 had been in a virtually unprecedented decline contraction lately, and how the next inevitable big drop, 50% plus, or even a catastrophic drop, 70% plus, will have made a shite ton of US dollars just disappear from the system. So that money will leave, if Bitcoin crashes, let's say one day it goes to zero. But again, this is fundamental. Now, you know me, and if you've been here for a while, I've traded Bitcoin as many longs as I have shorted over the years. So it doesn't matter if I don't believe in it. I share, Warren Buffett's view and, the late great Charlie Munger and all those. It's nothing. Bitcoin is nothing. It's a string of code or algorithm, whatever you call it, backed by absolutely, literally nothing but hopium. No earnings, no tangible assets, no intangible assets, such as copyrights and things. No dividend, no potential for future earnings. This is the closest thing that I've seen in my lifetime since I've been in the financial markets in the dot-com bubble. Because back then you had companies, at least they were companies. However, if you know how to look at a balance sheet and read, look at fundamental analysis, the companies had no earnings. A lot of it had no prospects for earning. They had no established management. Any company that came out, anybody that just went to IPO, brought on an IPO with the name .com in it, people were buying them up, just thinking it must go up because the internet's going to change the world. And the internet did change the world, but most of those .coms are gone. And again, the wheat got separated from the chaff or whatever chaff. You had the ones that, Amazons of the world and the others, even though that wasn't a .com. Yeah, it was Amazon.com. Yeah, it sure was. Those survived and they were here today. But the vast majority are gone. Those .coms like Pets.com and all that stuff. That was a poster child of it. So that's my point, is that, if there's no fundamentals to something at some point, it will be gone. But again, guys, I just went off on a fundamental rant that doesn't really mean anything, because I will trade. I don't care. I don't care if a stock doesn't have any earnings. I don't even look at that, honest to God, when I'm trading. If I'm looking at a long-term trade or something that, something like for a long-term swing or trend trade or even investment, I will look at the fundamentals. But normally, unless it's a low-price stock and I need to be careful there, I don't look at the chart. The chart's going to tell you where it goes, and the same thing with crypto. So I just want to let you know that if you are a Bitcoin bull, 3, 6, 12 months from now, there's a good chance that I will be posting it as a long, or may have posted it as a long several times over. But most likely, the next time around, it'll be a short trade right now, based on what I just showed you on the charts and how much it's run up. So, what I went on to say is, at least during the Dutch tulip bubble, at least you got a nice looking flower to stick on your kitchen counter, at least for a few days, until it wilted and died. With Bitcoin, it's not. But it's something until people don't think it's anything anymore, if that makes any sense. It's the greater fool theory. You can look that up. All right. I am going to take this video home, just looking at a quick overview of the markets, because that's what prompted me to start it this early in the day. Go to my clean board, SPY, breakdown. So there's the trend line, again, very well defined. There's that pre-NVIDIA whipsaw I talked about earlier in the video. There's a breakdown so far intraday. If we close today red, then that's going to give you a sell signal or a breakdown, whatever you want to call it. All the better when 50280 gives way on SPY. QQQ, well below the trend line, but it's danced around it recently. It's covered quite a bit lately. 435 is my magic number. We're coming up to that now. We're at 436 as I do this video. And I already covered SOX, I think. SOX is way up there because of NVIDIA. But remember, this is a more balanced ETF, XSD, the Spider Semiconductor ETF. And I don't have levels marked up, but let me get to the other guys here. Let's go to the big stocks that I formerly call the Mag 7. Microsoft, yellow line taken out right now. It is intra-period. Boom. I don't know if you heard that beep that just went off. That's XLK, trendline alert. I'm going to get to that in a second. So Microsoft, check. but a conditional check, meaning we need to close below there, and then that is a sell signal. And that's another. Remember yesterday I was kind of going through the check marks of all mag 7. You got 1, 2, 3, 4, 5, 6, 7 boxes, let's say. Call check mark on Apple. Right now a check mark on Microsoft, but it will be confirmed at the end of the day. Even better, that's my BOD level under 397. Apple, like I said, just keeps going lower and lower. Pretty much if it doesn't reverse today, these divergences will be taken out. So we keep moving the needle. But, oh, and look, we're already back to the purple level. This is where we reversed, covered all shorts, went long Apple and everything, all other things tech back then. Bullish falling wedge, breakout. That was the last and most profitable trade on Apple. So we're back to that level. So not just touting, that's where we covered shorts reverse, but also I had 2 purple lines. When I'm not sure, that's what I'll do. And obviously the BOD, the benefit of the doubt's the latter of the 2, and I still maintain that. Why? Well, first of all, it's that give it the benefit of the doubt. You're in a bull trend overall, big consolidation period. They're going to come in most likely and buy it. If they don't, then there's something else going on, and that's get out of Dodge time. But either way, 166, once that's taken out with conviction, especially if we have more check marks that I'm looking for here that I'm going to continue to cover in this video, all the better. But Apple, you can see, peaked all the way back in the middle of 2023, made a marginal ever so slightly new high or equal high, doesn't matter, close enough, boom, also still a divergent high, and that divergence has been playing out. So there's our check mark number 2, Microsoft, like I said, conditional pending end of day close. Apple already took out my yellow line. Remember, the yellow line's right now all I'm looking for. This one's already down to the purple. That's a more significant level. NVIDIA needs to take out 742, no check mark there. Obviously, if it takes that trend line, it kind of had the pre-earnings whipsaw as well, back above it, been kind of dancing through it, so that's why 742 is my magic number. Amazon, 165.74-ish, still well above it, but also I gave you these minor support levels in white, and it's now just cracking below the trend line. So if it can close below that trend line today, that would be a start. Then 171-ish, and then of course 165.74. Alphabet starting to, as of right now, as I'm doing the video, we're now below the 200. We took out today in one fell swoop the 200-day simple moving average in blue right there. And this red line is a 200-day exponential. Again, the day is very young, but as of now, that's a breakdown. Alphabet needs to, close above here. And I often say this, guys, it's not unusual to see a brief, usually up to a week, whipsaw down below these 200. So remember, Apple just took them out, but again, that's happened before. Collectively, when the majority of these mag 7s have taken out that level collectively, that's when you'll have some high probability sell signals. But it's a kind of an incremental thing for me. So what did we have so far? Microsoft check, Apple check, NVIDIA nope, not yet. We're on Alphabet now. I didn't have a yellow line there, but if we take out the 200s, and you can see my purple lines, then we'll get a check. So I'm going to just leave that blank for now. Let's look at the next one. Meta, nope, got to take out 454.43, and then just below that, the BOD is the primary uptrend line. So no check on Meta. Tesla's already done. I gave you that the other day. Took out this trend line. Told you that's probably the end of the counter trend rally, and boom, the stock is down, in just 2 days. It's already in a bear trend. It's down 9%, well off its highs from all the way back in 2021. So obviously no longer anything magnificent about Tesla. And then last but not least, my 11 sectors of the S&P 500. I told you just a second ago I had a price alert fire off on XLK, but we're right on the line. The way these alerts work, if any slight violation. So watching this, we're on the line. If we take out today's lows and close below them, then boom, that's going to be a breakdown and a check mark. Remember, these are a second set of check marks on the sectors of the S&P 500. There's 11 sectors. I'm not waiting for breaks on all 11 because some of them are more bullish than others, like energy, for example. You want to see that rally to support a bearish case. You want to see crude going up. So the big ones are tech, and so we don't have a check mark yet, but we could soon, or we bounce. And here it is to you, the folks out there that are saying we're going to the moon and, the market's going to go up, keep buying the dips. Here's a pullback to support. This is the primary trend line off the October lows of XLK. You can buy it if that's your thing. I see a bearish rising wedge. It looks right for a breakdown. So I'm not going to buy it. Just like Apple last week when I threw that as a trade idea, I'm going to wait for it to break down, and then that'll be confirmation to, short or add to shorts on the NASDAQ 100 or XLK if that's what you want to trade. XLV, healthcare, same thing, starting to crack, but too close. If I have to zoom in and squint, there's an example. Remember I was showing you earlier in the video. See that skinny part? You might not be able to see it in the video, but there's a candlestick shadow there, a little skinny tail. It means we punched through there intraday only to close solidly back above the trend line. A green candle, the way I have them set, means you close at the top there. The red candles at the low. So that's where we're at right now. And the two top sectors. Remember, I'm going through the sectors as I often do in order of their weighting in the S&P 500. Tech by far is the biggest at over 1/4 of the returns of the S&P 500. Healthcare is number 2. And so those two are both on the verge of breaking down. I'll update it at the end of the day. If they don't break down, I won't update it. It just means we closed on it again, like we have for the last few days. Third largest, XLF, right on the trend line, right for a breakdown. Hasn't happened yet. So there's 3 right there that if we, if they rally from here and we close at or above where we're at today, then they hold support. They close on or above trendline support. Whether it's today, tomorrow, next week, or a month from now, if they take out today's lows, they're going to be below those trend lines. XLY on the trend line. So you see where I'm going? I'm clicking through these in order of, this isn't randomness. This isn't random coincidence. I put these trend lines out. I've been covering these now for a little while, and they're all there. And that's why I got a little excited last week. Remember last week when I started putting these yellow trend lines up, I said, wow, I'm seeing not just one, but almost all these sectors kind of tell me the same thing. They all have these key trend lines that I can't guarantee they're going to be taken out. I think they are going to. I even made a call last week. I said it's a fool's errand to make a prediction for timing, but I think they'll be taken out this week. Again, why? Just the feel, the look of the chart, the how, the scope of the divergences, the bearish PPO crossover in play. It's not happened yet. Those are things you look for here. And I'll show you what I'm talking about. You go to put up a PPO histogram. I talk about these hills right here. And this is a red hill, inverted hill. This is a green hill. These define trends. When you get a bullish crossover like you did right here, if I take the line up where this started, it gave you this, and you were in an uptrend. Then you had a bearish crossover right here, and you were in a downtrend. And then you had a bullish crossover right here, you were in an uptrend. And so if we go a little lower today, the histogram's almost at 0, it's at 0.33, then we have crossed, and it's pretty clean. Again, it's swing trading, guys. Swing down, down, red hill, red hill, red hill, down, green hill, up. Okay? So that is why I predicted this week we'll get the breakdown, and today would be as good as any for me. All right. I can beat a dead horse here and go through these. I went over these levels last week. XLI is okay for now, but there's your yellow line. You could probably put a little minor trend line there that'll bring in some selling down to the larger uptrend line. XLC just broke down today, but I had a BOD line at 78 right there, and we're right on it right now. So we took out the trend line today. That is a sell signal breakdown. But more importantly, and this is why I do these BOD, benefit of the doubt, there's a nice clean trading range there. And we're at the very bottom of that trading range. If it breaks, going to be a quick swoon down in my opinion, especially if the other sectors break. XLP, staples, bouncing, doing good today. Okay, well, I have a yellow line, but guess what, guys? Staples are a defensive sector. What is a consumer staple? Well, you have consumer discretionary stocks, which I already just went over. Where was that? XLY. The discretionary is when you're doing well. You got a big fat bonus this year. You had a good year. You buy what you want. You buy that big screen TV. Get the Lexus with the leather seats. Whatever your car is. And so that's clearly a bearish looking chart, big red wedge. Consumer staples, the institutional investors, smart money, buy these. These are defensive issues. When the economy turns and goes into recession, guess what? You don't upgrade to the 85-inch Sony TV. You stick with that older, 65 on the wall. It's kind of giving you little issues. You hold on to that because you're worried about losing your job. But what you don't stop buying is toilet paper and stuff like that. And that's what's in the consumer staples. And so you can see that's going up today. Now, one day doesn't make a trend. And I can tell you too, even though they're defensive issues, they will go down with the lot. When the market goes down, you can go back to 2008. I've been doing this long enough to tell you that almost all sectors are going to go down in the S&P 500. Staples just go down less for the reasons I just mentioned. So that's the takeaway is, keep an eye on this trend. Right now today the institutions are buying this and they're selling tech. Tech is cyclical growth. All right, I'm going to stop here. You have all the levels. I don't think I've ever been so detailed on kind of the trading plan, the levels to watch, and given in the last couple months. I posted a couple of the earlier sell signals, but made it clear it was just that. QQQ starting with the 60-minute chart, starting back here with this breakdown here, and then this breakdown, but it said, look, take it with a grain of salt. Plus we had other levels that had to go, the key levels below, so we never got that third and confirming sell signal yet. But so far, and I also talked about this, I talked about the whipsaw, the NVIDIA whipsaw, and then how we were back testing the trend line. And what I said before we even back tested, and I say this often, the problem with shorting a back test, once you get a sell signal on a breakdown of an uptrend line or a rising wedge, it is objective, and I will point those out as objective entries, a short a back test of a wedge. However, I always say the problem with that is sometimes you keep back testing at higher and higher levels before you actually then reverse for good, in which case you're going, you're going underwater, you're buying at higher and higher prices. Or in some cases, you back test a few times and then you regain the trend line and then you rally from there. And so what I like to see an impulsive rejection off the trend line, and I think that's what you can count as an impulsive rejection, clearly. The first time it wasn't. This is when we back tested. Again, we're on a 60-minute chart. You look at the daily, you'll see it better. So these back tests, we were on or right above it there, back test. Now it's kind of impulsive when I extend the line. Okay, I got to wrap it up here. I said it wouldn't be long, and it's long. That's what I do, guys. You'll figure it out sooner or later. As always, click the settings icon, and you can up the speed to 1.25, 1.5. If you're a super quick listener, you can put it on 1.75 and speed up the video. Also, I say this often, but remember, anything with potentially time-sensitive analysis or trade ideas, I will get the video out to you when I post it and it comes into your inbox. It's going to be initially processed on YouTube server with the initial pass on their servers for 360p, which is low definition. So the videos aren't going to be clear. You need to just wait a couple minutes, try refreshing the page. The video is going to start over, but if you do that after, usually depends on the length of the video, usually within just a few minutes, you got 720, which is the highest I record. And I do that. There's no difference on these charts I'm doing between 720 and 1080 HD. 1080 HD just takes almost twice the time to process and upload and all that. So the 720s I can get out to you quicker, and they're plenty clear. Unless if they're not clear on your monitor, you need a new monitor, or bigger phone if you're watching them on your phone. All right, let me wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.